up, everyone? In this video, we're going to be going over a really unique strategy that is a little risky but has a lot of potential reward to it, and now's like the perfect time or like the perfect market for it. So I definitely want to go over it. With that being said, if you guys like the videos, I would really appreciate it if you could hit that like button, maybe leave a comment down below. It helps grow the channel so much. But with that being said, let's get right into today's video. So everyone knows a bunch of growth stocks are just getting destroyed right now, whether you're looking at Corsair, Palantir, DraftKings, Zoom, it's down big time. And let's say you have shares of these companies, whether it's shares of DraftKings or shares of Palantir or Corsair or whatever, you're probably down a decent amount on them, which definitely sucks for the short term, but there are some good things that we can turn this situation into. So whether you have shares of these companies or any company that's down big time, or whether you have short puts that are in the money and you're about to have shares, there's a strategy that we can implement that can actually be very good if the stock does rebound. So let's go through an example really quickly. If we look at Corsair, let's say you sold like a Corsair put option, like the 25 strike put, or like let's say you bought 100 shares of Corsair at $25 each. Right now, Corsair is at like $21 each. So if you had 100 shares at 25 and now it's at 21, you're down around $400. You're down $400. So it definitely does suck for the short term, but what you can do instead of holding those shares is, if you wanted to get a little risky, what you can do is you can sell those shares right now, so then you'll get $2,100 back, and then if you go to the options chain and you go with a ton of time, like I'm talking about like the most time you possibly can, and then preferably as deep in the money as you possibly can. So if we went to that for Corsair, we would go to January 19th of 2024, and then we would go to the $12.50 strike calls. You can buy these for $1,050 each right now. So if you bought two of those, you would have two $12.50 calls for January 19th of 2024. You still have $2,100 worth of Corsair to the upside, but instead of having 100 shares with the current value of $21 each, you have two $12.50 calls, Corsair for January 19th of 2024, and you paid $1,050 each for those. Now here's the thing. Let's say Corsair explodes up to $35 like over like the next, I don't know, maybe 6 months. If you just had your 100 shares at $25 each, then you would be up around $1,000 because you bought at 25 and now it's at 35, and you're up around $1,000. But if you bought the leaps, or you turned your shares into options, then you will be up a lot more, like maybe $2,000 or more, depending on the scenario. But with this increased potential reward also has increased risks. So let's say Corsair, you do this little exchange when Corsair is at $21. Basically what that means is you now control, instead of just 100 shares of Corsair, you control 200 shares of Corsair, but your break-even price is slightly higher. So basically, if you bought the $12.50 calls for $10.50 each, your break-even price would be around, what is that, like 20, let's see, so if we do $12.50 plus $10.50, so that's $23 each. That's your break-even price, and the stock right now is at 21. So if you exchange your shares for leaps, you have a higher break-even price, but you leverage your money significantly. So if you have a very high conviction stock right now, whether it's Corsair or Zoom or Chewy or DraftKings or Palantir, if you close out your shares and buy in the money leaps with a ton of time instead, one, you can really leverage your money and you can like kind of double down on the stock. Or what you can do is you can take the proceeds from doing this little exchange and you can buy other stocks at these levels. So like I said, if we go back to the original example, if you bought 100 shares of Corsair at $25 each, and right now Corsair is at $21 each, you're down $400. So if you sold out your shares, and let's say instead of buying two calls with a bunch of time, let's say you only bought one call with a bunch of time. So you bought one call for $1,050 each. That means you would have $1,050 each left to invest anywhere else. You can invest that into a stock like Apple or the SPY or DraftKings or Zoom or wherever. So if you have positions that you're down on, that you have a very high conviction that they will explode up within the next 2 or 3 years, you might want to exchange your shares for these leaps. The downside is that your break-even price is going to be slightly higher, but the pros that you'll basically reduce your capital invested into the stock by 50%. And then the good thing is that you'll still control the same amount of shares. So basically, you can leverage your money significantly if you have a high conviction play. But the downside, like I said, is you have a higher break-even price. And if the stock's below your strike price by expiration, you will lose your entire investment. Where if you just had shares, you wouldn't lose your entire investment. So for example, if we go back to Corsair, and we were looking at the $12.50 call for January 19th of 2024, if Corsair was below $12.50 on January 19th of 2024, you would lose your entire investment. Where if you just had shares and Corsair was below $12.50 each, you would be down significantly, but you wouldn't have a position that is now worth zero. So there's give and take with the strategy, but if you have a really, really strong conviction in any specific company, now's a decent time to do this little swap. I'm definitely considering it on some of my positions, but like I said, it is a little bit risky because in the event that these stocks keep tanking, it won't be good. But then again, let's say like more than likely that these stocks do rebound up, it can be extremely profitable for you. But it's just very, very important that you have a very high level of confidence that the stocks will pop up. To me, it's like a no-brainer that Corsair will be above $23 on January 19th of 2024. But that's just my opinion, Like the market doesn't care about anyone's opinion. So you gotta keep that in mind. Like it's definitely good. There's definitely a lot of opportunity with it. I'm definitely really considering it for my positions. And so I'm just going to do like a quick recap just so everyone can understand it. If you have a stock position that you're down on and you're very confident in that position, you can sell your shares now, go to an options chain that has a ton of time, preferably as much as possible. You go deep in the money as possible, and then you buy that option, and then you can leverage your money. And with that, by doing that, you will have money to invest elsewhere, whether it's other stocks, or you can essentially double down on the stock you are trading. So with that being said, one of my favorite reasons that I love the options market is because it's very versatile. Because especially when you're shorting options, there's a lot of ways you can like adjust your position and turn it into a profitable trade. And that's what's awesome about the options market. And it definitely does provide a lot of leverage, which can be great, but it can also be dangerous if you don't use it the right way. So at the end of the day, I hope you learned something from this video. It would really help me out if you could leave a comment down below. If not, it's okay, but I'd really appreciate it. With that being said, I hope you have an amazing weekend, and thank you so much for watching.